Alright guys, today we're going to do some training on how the cash flow forecast works within JACK App, and we're going to look at the setup that is required to ensure that your cash flow forecast is providing an accurate balance into the next 18 months. First of all, here we're looking at the cash forecast in this file, so you can see that the cash flow forecast is predicting a balance that's pretty steady over the next 18 months. Now, it's important to note that this is only including current active jobs that are under construction. So you will start to see your cash flow drop off as those projects are completed. If you want to see an accurate representation of your cash flow forecast, you can toggle on include weighted pipeline sales, which will then include the profit that you're expecting to make on the leads within your pipeline. You can see here that's adjusted the cash flow forecast. Within the cash flow forecast, you've got a summary of the expected cash in bank. You can filter the date ranges here to go back in time, forward in time. You can scroll down to see some more detailed breakdown of what is making up those cash flow forecasts, the total inflows and total cash outflows. And then you can come up the top here and dig in further on the income that's being predicted for each job based on the timing of your client invoices and any other income that you receive. Perhaps you rent out half of your warehouse space, perhaps you receive some other income that's not already captured in the job budget. And then if we look at the expenses tab, we can do a deep dive into the outgoing payments that are expected to our suppliers and contractors for each job, as well as see our overhead wages for our employees. And then the system will automatically calculate the superannuation liability and when it's expected to be paid, the pay-as-you-go withholding liability that you pay on your wages, as well as any tax installments that you enter into the system. And then it calculates an asset or liability position for your BAS GST filings, which is the net amount of GST that's flowing through the system with your invoicing and bills. We can then further add overhead expenses for the business, so office rent, marketing cost, motor vehicle expenses, to give ourselves a nice, accurate cash flow forecast for the overall business. When showing how the cash flow forecast automatically updates based on what occurs in the system, we should have a look at what the bank balance is being predicted in May 2026. We have a bank balance of $785,000 predicted. If we then go to an estimate and convert that into a job that's going to become under construction, create a job, apply our job template. It's a fixed price job in Henley Beach South. Then if we come back into our cash flow forecast, you'll now see that our balance has adjusted. We're now predicting a cash position of $823,000 in May 2026. So that's now automatically taking into account the net cash position of that job over the next 18 months. Now I want to start digging into the setup that is required to ensure that you have an accurate cash flow forecast. To start off with, we come into settings and data setup, and we want to look at our sales pipeline setup. Within our sales buckets, you'll see that there's a section where you can edit the conversion rate. Now this allows the weighted pipeline sales calculation to occur. So if I update my conversion rate for new leads to 10%, pending response is also 10%. But when I get them to a meeting booked, my conversion rate jumps up to 20%. While we're here, we also want to look at our project types and add a standard duration for our projects. So single story, we'll just update that to 7 months based on what we've been seeing. And double story, we'll adjust that to 9 months. So now when we look at our sales pipeline, we have all of our leads captured with, and this is important, it's important to add a budget amount and a estimated construction start date, because these are key factors that are used in calculating the weighted pipeline sales. So here, this graph is showing our active jobs that are under construction, but if we toggle on the include weighted pipeline sales, it becomes a more accurate representation of the money that we expect to receive in our bank account if our conversion rates are accurate and our expected construction start dates are accurate. And these can be updated as more information comes to light. Next, we'll look at our cash flow setup within settings. So here we want to choose when our subcontractors or suppliers most often invoice us or send the bill. Usually this is schedule item complete, and then we set average payment terms for our suppliers and contractors. Typically this will be 30 days. In the default invoice payment terms, this is where we add the terms that we give our clients. So we typically see this being somewhere between 7 and 14 days. And then we want to add a target markup that we aim to achieve across all of our jobs. So this would be the average that you're trying to achieve across all jobs. Make sure that you're applying markup here, not margin. And then the final setting is if you do cost plus work, what you can do is set how frequently you invoice your cost plus jobs. So this might be on Friday every 1 week, and you set a start date for that. So we'll save those changes. The target markup here is what will be used to calculate the weighted pipeline sales. So rather than calculating the income and the expenses, it'll take the job budget that you have set and it will apply a 30% markup as the net amount that's coming into your bank account. So now we want to look at how our job templates impact our cash flow forecast. Within a job template, there are many things that you can template, but in terms of cash flow forecasting, the important ones are the client invoice setup, the schedule, and the cash flow setup. With client invoices, you can link each progress claim to a schedule item. So that means when council assessment is deemed to be starting in the schedule, this invoice will be scheduled to send, and the cash flow forecast will add 14 days onto that date and calculate that income being received in our cash flow forecast. So each one of your invoices from deposit all the way through your progress claims to practical completion should be linked to a schedule item. This then means that to have an accurate cash flow forecast, your schedules need to be kept up to date. So that means getting your project manager or whoever manages the schedule to continually come in here and update where the build is at, what's been completed, and what is still pending. I should note that with the client invoice setup, if you don't link your invoices to a schedule item, the system will still automatically spread the income that you expect to receive from that job over the lifetime of the project. That will be the start date of the first item in the schedule to the end date of the last item in the schedule. Finally, we have the ability to link each cost category to a schedule item as well. So this will allow the calculation of your outgoing payments to suppliers and contractors to become much more detailed. If you don't complete the cash flow setup, the system will automatically distribute the outgoing payments across the lifetime of the project, and that number will be based on the expected builder costs from your job budget. A good example of how to do your cash flow setup would be foundation and site works. Any dollar amount that is assigned to this cost category will be expected to be paid when pour lower slab schedule item is marked as complete. And you can split this out into multiple percentages. Maybe you have 50% at the start date and 50% at the end date, whatever most accurately reflects how your supplier will invoice you. So once you've completed the cash flow settings setup, you should come into the cash flow forecast and look at the income and expenses that are expected from each job and ensure that those are aligned with what you would expect. If not, there's some additional adjustments that you need to make either to the schedule, the cash flow setup, or the timing of your client invoices. You can also go to the job specific cash flow within each job by going to job financials and cash flow. Now this will show you the predicted incoming payments and outgoing payments. And as you record bills and client invoices, your actual cash flow will be populated as well. We also have some handy graphs down below which show the cash flow over the lifetime of the project. The job budget remaining, the client invoices remaining, and a work in progress calculation. It's important to check that all of your client invoices have been set up and are sitting in scheduled, as this allows the system to more accurately calculate when your incoming payments are going to occur. By completing the cash flow setup on your job template, you will save yourself a lot of time, because if you don't, you'll have to come into each job individually and set up the cash flow setup for your outgoing payments. For the weighted pipeline sales calculation to work, it's very important that you have a construction start date estimated and a budget amount estimated. Now these can be changed as more information comes to light, but it's important to get your sales team to enter some data here. A quick way to check that the Cashflow Setup has been completed is to toggle on the Include Weighted Pipeline Sales and check that the graph adjusts. If you're missing an important setting, this may not change. So now we'll look at adding some other overhead expenses to give ourselves a nice accurate representation of our cash balance going forward. If we go into expenses and scroll down past the project expenses, you'll see that we have some overhead wages here. The superannuation liability is being calculated and the pay-as-you-go withholding amount is being calculated. If we want to add another overhead wage, we can come into Contacts, Staff, click on a staff member, and then go to Wages under their contact. So from the month of September, Liam Demo will be earning a salary of $100,000 annually. And then to calculate our superannuation liability, we grab the monthly salary amount times 0.12. To estimate our pay-as-you-go withholding tax, we would then take the monthly salary amount and times that by 0.25 or 27. It's important to note that you can schedule changes, upcoming changes to an employee's salary if needed, and then this will now be reflected in the cash flow in the expenses. You can see that this is taking the net amount of the wage and then putting the pay-as-you-go withholding tax down here. We can then adjust the frequency of our superannuation, BAS and pay-as-you-go withholding filings. So if we click in the settings, we can change the frequency of our BAS filing from quarterly to monthly. Now, the error here is telling me that I must have it at the beginning of a quarterly filing period. So if we change this to October, change it to monthly, that update will now be reflected in the cash flow forecast. You can see here, our BAS is now being spread over each month. So now we can look at adding some other overhead expenses. We have insurance premium entered here monthly, and then we can look at adding some other overhead expenses. So let's say we pay $5,000 per month for our office rent. We can say this is starting from September. It's an operational expense type. We're paying monthly and the amount is entered inclusive of GST, $5,000. We can save that. If we then look at our other expenses predicted, you can see our office rent is entered in here. Now let's say we know that our rent is going to double in price in January. We can schedule a change by clicking on the expense itself, click schedule change, make this an ongoing change from month January 2026, and the amount is now $10,000. If we go back and look at our summary expenses, you'll see that our rent increases in January 2026. The final step to ensuring that your cash balance that is predicted going forward is more accurate is to do a balance adjustment at the end of each month. So once your bookkeeper or accounting team have closed the accounts, reconciled the bank accounts, they should provide you with a cash at bank balance, which is entered into JACK to ensure that the balance is up to date. It's important to note that the wages entered here in the cash flow forecast should only be for your overhead staff costs. Any employees that are completing a timesheet that is recorded against a job budget, their outgoing cash payments are recorded already in the project expenses. Another tip is that you may want to add just one total wage expense per month under one employee, which prevents visibility amongst staff members of wages. You can choose to add your other expenses as individual line items, or also you could add them as one lump sum, which is your overhead costs per month. Adding them as separate line items gives you additional visibility over what's impacting your cash flow and also allows you to more easily schedule changes out in the future. If you need assistance working out your overhead expenses, I recommend chatting to your accountant or bookkeeper. Or if you have access to your Xero file, you can jump in and get an average over the last 3 to 6 months and enter that number in to give you a good indication of what your overhead expenses are each month.